Hey, everybody. I thought I would share why I invested in gold. Those that know me, I am not a gold bug. I, just solely look at things very logically and choose my investments wisely, let's just say. Uh, my business partner, on the other hand, has been a gold bug. Okay, not a doomsdayer, but he started his career on the commodity exchanges in Chicago in the late 90s. And the reality is he understands commodities. He also was exposed at a young age to a world where devaluing the US currency is a given. Now, at what rate and how we control it is what's in question. We know that we see inflation every year, whether it's 1, 2, or 3%, or jumps to 8, 9, 10%, or like in the 70s and early 80s into the well into the double digits. Okay, we understand that from a very base level. And how does gold play into that and all that stuff? Well, I've looked at it much like, say, Warren Buffett as a dead asset. There were many other things that I felt more rewarded on. Stocks have generally made me feel more rewarded and built my wealth. I'm a big real estate investor. I love rental real estate. That's been very rewarding. And so why did I all of a sudden jump into investing in gold? Now, again, it's a piece of my puzzle. It is nowhere near my primary way of investing, not even remotely close, more like 10% of my investing. And for those that have money that they can invest in a long-term buy and hold strategy, I will recommend it. It's certainly a great diversification for a portfolio. So let me jump into this and help explain my point of view on gold and why it changed and why I did jump in and start investing in gold. And one of the big things was, kind of studying what true diversification was, learning about correlation. That word correlation becomes really important. And when you look at the writings on the holy grail of investing, and we've unlocked the key to building consistent growth, impervious growth, I've seen it referred to. The reality is it's all about the correlation factor. You want as many asset classes that are completely uncorrelated. Now, in a perfect world, they have to be growth-oriented, uncorrelated assets and well diversified on top of that. And the only people that can really truly unlock this are the uber rich, the billionaires. They can invest in funds that own, sports teams all across the world, whether it's the Premier League soccer teams to, sorry, football teams to the U.S. American sports, all over the world, sports teams are getting bought up by big funds that are filled with rich people's money. That type of stuff, funds that literally own businesses instead of having an investment firm investing your money, own a piece of that investment firm. These funds are inconceivable to most normal people. But the reality is that that's where this whole idea of true diversification really stems from, is studying the uncorrelated connection of all of these different asset classes into true diversification. And so how does this relate to gold? Well, gold is such an interesting animal. It's part international currency and part investment. And people that don't understand it, well, what's really the value of gold? Well, start looking into it. Electronics are filled with gold. We had the space shuttle go circle the moon, all interstellar, whatever travel. Oh boy, lots of gold on that spaceship. I guarantee it. Gold is an incredible conductor of electricity. There's so many properties and values that add its actual manufacturing value. And outside the United States, It is a different animal. It is a store of wealth, period. You've got to understand that outside the United States, a lot of countries, their currency fluctuates so much that finding something like gold to put your money into stabilizes that piece of wealth. And so it's looked at completely differently outside the United States. And those people that are only United States oriented and don't travel a lot and don't understand the world out there and the monetary system out there don't necessarily see that. But the more you travel, the more you start looking into gold and start understanding it, you start realizing that outside the United States, it is an international currency. It is a way to store wealth. It's an alternative to putting your money in a bank and watching that value of that currency bouncing all over the place. Gold stores that value. And we've had it all through time. You can look at 1,000 years of gold storing value. So I've understood that. I still called it a dead asset. But when I started learning more about gold and we started looking at the ways to invest, I started seeing what my business partner was doing with his gold. That's what started changing things for me. So let's take a look at this. At base, my class this month is all about inflation. I teach this class all over the place. You can go to our nonprofit website and register for an upcoming class. But I talk about inflation right now, and I talk about protecting yourself from inflation. And it's not a gold class. No, that's just a piece. It's a piece. That's it. So if your goal is to keep up with inflation, it really wasn't tough. As a matter of fact, this goes from 2000 to today, and you barely can tell there's even a blip in here in that 21, 22, and we were seeing 5, 6, 9% inflation. You can't even see it on this chart. It's just so meaningless because we had so many years at 2, 3% benign inflation. So $100,000 invested and growing with inflation, that's your baseline there. You're trying to beat that. Wasn't hard. Might have fell behind a couple of years. That was about it. That's a long time. That's 25 years. That's quarter of a century right there. Benign inflation. No wonder United States, we don't need gold. What's it for? I get it. Trust me. Well, here's what gold did. Gold beat inflation. Kind of logical. Totally makes sense. Gold did really well in the early 2000s because 2000 to 2010 was the lost decade in the stock market. It struggled. Gold did well. And what's weird is, although gold is an uncorrelated asset to stocks, okay, it tends to be, and this is why this invest from an investment standpoint is so intriguing, it tends to have a negative correlation when the stock market's not doing well, meaning it tends to do well when the stock market does not do well. Everything thereafter is completely uncorrelated. It moves sometimes up and down and sideways and has no correlation to the performance of the stock market. But all of a sudden, market starts not doing well and it tends to do well. So it becomes a negative correlation to the stock market. That's why, studying it, I start liking that. I like that as a diversifier in a portfolio, but still, it's a dead asset. This shocks a lot of people. From 2000 to today, gold versus the S&P 500. Yeah, the S&P 500 just barely crossed over it in the last year. That's it. That's amazing, isn't it? So 100,000 invested in gold versus 100,000 invested in the S&P 500 for a quarter of a century. They're pretty close to breaking even. That shocks a lot of people that don't pay attention to gold. It shocked me. It's about 5 years ago I started realizing that. And 5 years ago, gold was actually beating S&P 500. And again, you can pick any different decades. If we started from, say, 2010 to today, S&P 500 is blowing away gold because you're kind of taking it at the high after the bad decade. But the further you go out, the more you realize that gold is viable from an investing, storing a value standpoint. Well, from an inflation hedge standpoint, I'm a big believer in stocks, real estate, and gold. And so I took real estate. I went and got the statistics on real estate growth, average growth of just United States real estate. And then I also went and found the statistical average in the United States for rental property profit. So profit from the rents is only 6.5%. I consider that a low number. So I did the growth in value of real estate plus 6.5%. And that's what real estate has done in the last quarter century. 100,000 in real estate in 2000 jumped significantly. And I think most people, if you think all the way back to 2000 and think the average value of houses back then compared to today, add some rental profits along the way, this turned out pretty logical, I thought. But it still blew me away that it beat the S&P 500 by that much. And yes, I've done well in real estate because of this, right? Because I perceive it as a great inflation hedge, but it's an overall great investment as well. And so rental real estate was great. But the kicker that really changed how I viewed gold was what my business partner was doing and has been involved in very heavily, especially for the last 10 years. And it's the lending and leasing of gold. It's actually owning physical gold and lending it to a jewelry manufacturer to create jewelry and then go sell it and pay you interest to use your gold to do it. So earning gold on your gold, like earning interest in a bank account on your dollars. Okay. Not really any different. I'm depositing gold and I am earning interest in the form of more gold. So if I have 10 ounces today, by the end of the year, it'll be 11 ounces, 12 ounces, 13 ounces. I have more ounces of gold the longer I invest. And when you compound this over time, the value of gold plus a yield, and I'm conservatively using 4%, our fund that we created on doing this is actually earning significantly more than that, even net of fees. So now we don't have the cost of holding gold, paying an insurance or a storage facility or any of that kind of stuff, or the risk of having gold at home. We're not doomsdayers. I don't need to have the spendable gold at home that I can chip off pieces and buy my meals with. I don't believe the world is coming to an end tomorrow. I don't have a bomb shelter. But I do own gold, and that gold is earning for me, and that's what changed how I looked at things. Now, I recognize my timing on this was impeccable, but the reality is I know I got lucky on that side of it. Just like I got lucky on cryptocurrency. I didn't go all in on cryptocurrency. When in early stages, I saw some viability of it. I saw the reason that internationally this became popular, kind of why gold has been popular, more popular outside the United States than inside. It's the ability to have an alternative currency for these fluctuating currencies like China and India and all these other places. So I saw that idea. I put a tiny bit of money in crypto and I watched it rocket to obscene numbers. And I said, yeah, this is, I let the current administration get in and got a little boost out of that. And I said, I'm out of here because I took all that money and then I put it in gold, then subsequently I looked really smart. It went from 2,000 an ounce to, almost five, went over 5,000 and pulled back just a little bit. But I still just put more money in here because I don't think gold's done, first of all. Second of all, I do think we have significant inflation coming. And third of all, even if gold goes sideways for the next 10 years, I'm earning that yield. I have more gold, more ounces the longer I'm in here. So just like when you put dollars in a bank and you earn interest, you have more dollars. Well, I'm doing that with my gold. And this is what gold plus 4% looks like. This is simply the price of gold plus 4% yield being reinvested. You look through history on this, and that is a fantastic investment, but now it's also what I consider a currency hedge. And if we continue devaluing our currency, which we have to, The amount of debt the United States is in, we have inflation coming. It's the only way to get out of this debt. We're certainly not paying it off. We just need to make it look small. Now I have physical dead asset gold working for me and earning. And although it wasn't available for the last 25 years, it was easily available the last 10 years, just not enough people really know about it. And there's not enough interest in the United States for stuff like this because they don't see what's going on outside of the United States. They don't see that all these central banks of all these other countries out there are looking at the US dollar, starting to get a little worried. The European Union would have kicked us out if we had the debt to GDP ratio that we currently have. If we were part of the European Union, we'd be in default. Outside the United States, the central banks are starting to get worried about the US dollar. So what do? They sell US dollars and buy gold. There are gold banks being set up to create international exchange currencies via gold. One country buying oil from another country, the common currency ends up being gold. There's lots of things going on behind the scenes that makes this $5,000 mark. Yeah, that's may just be the beginning. Is there some cryptocurrency money that got out and got into gold because woo, it's the gold rush. It went from 2000 to 5000. Woo, yay, yay. Well, the reality is yes, that might have been some of it, but there is an enormous amount of winds changing outside the United States and wanting to utilize gold more as a common currency, the global currency. And that is the big difference maker in this. You can now do banking in gold. There is going to be, and they're working on it, and they're actually working on it with our leases and bonds in creating a cryptocurrency that's dollar for dollar backed by gold. That becomes important. Now you've got a cryptocurrency. The problem is the guys creating the cryptocurrency, one crypto in there is going to be worth 1 ounce of gold. Well, they're going to take your dollars that you just bought that one gold currency with, and they're going to go invest it and earn interest on your money, and they're not going to give you any of it. So why did I start investing in gold? Because I now realize I have a viable option to make it not a dead asset. And that made the big difference in my book. And so, yes, we did create a fund. It's a private investment fund, but there's lots of ways to be able to invest in this. And we help facilitate all of it because if I'm going to recommend investing in gold to anybody, client or not, I'm going to at least show them the best way to invest gold for them. And buying GLD, the ETF that follows the price of gold, doesn't really make sense to me. I've never owned that. I never would own that because it's gold minus 0.4% when I'm making gold plus a significant margin. I'm making well more than 4% personally. So it's kind of like having its own dividend yield and reinvesting and compounding that dividend yield. And that makes a big difference. So this is why I invest in gold. It's a fantastic diversification. It's a long-term buy and hold store of value that I think is going to be very essential for combating the inflation that we have coming. It's a piece of the pie. It's not the whole pie. Don't put all your money in here. I recommend typically 5 to 10% for a lot of our clients that have money they can store for long periods of time. Some people, functionally, it doesn't make any sense. You need all of it to help fund your retirement, and you need the yield to be able to spend and keep your lights on. That's not for you. Not everybody has idle money that can help them combat inflation. So diversification, combating inflation, it's not a dead asset anymore if you know how to invest it properly. The leases are all insured and very, nice and safe. And it is a significant change in how I viewed gold. All right, I hope that helps. Take it as an infomercial if you want. It's just my honest opinion. I was never a gold person, and I'm still not, screaming at the highest mountains. Everybody should have all their money in gold. I never will. I'm a big diversifier. I want things well diversified, but when you are able to find a uncorrelated asset that average people can invest in, that's a big difference maker. And I think this is a big difference maker in a lot of portfolios in the long run. All right, yourinvestmentcounselor.com. You can jump on there and ask for a free meet and greet. You can schedule it right on there. And yes, you will meet with me. FPFEAZ.org is the nonprofit organization I run. I do full form classes. One of my classes right now is how to protect yourself from inflation in retirement. Certainly give us a call, subscribe, go to our company website, sesweb.net. You can also schedule a free meet and greet on there as well. Happy to meet you, talk about any of this stuff. I hope this point of view helped on the gold thing, and let me know how it can help. All right, everybody. Thanks again. Talk to you soon.